I'll have to be honest with you. First thing I'm going to mention right up front is it's free. I like this service when it's free because, you know, you can tie up a lot of money in different services, and from experience I found out that sometimes you can pay a lot of money and you may not be getting that much out of it.
Good afternoon, welcome to GrainTV. It's March 13th, 2014. I'm Logan Burgess. To my right here is Brock Shimano to help break down a very mixed trade in Chicago on a Thursday. Let's jump into the quotes here and see where the grains ended the trade session. Corn was off 3.5 cents. Soybeans for May delivery up 9 1/4. Chicago wheat was down 10. Kansas City wheat was off 11. Brock, we have a lot of fundamental news to talk about today, in particular as it relates to soybeans, starting with that export sales report.
We did get the export sales report out here this morning. Let's take a look at this table here. You can see that corn did beat expectations, or met expectations actually on the old crop reported sales. New crop came in right at the low end of expectations as well. You know, wheat continues to just motor along. You know, fairly mundane sales there for wheat. Wheat came in right within analyst expectations on both old and new crop, but I think the highlight out of this report and the number to take away here is the new crop sales for soybeans. We came in at 776,000 metric tons there, well above analyst expectations, and that got the market off on a good footing here this morning.
Yeah, it seemed to kind of firm new crop prices here. We're going to talk about that in more detail later in the show, but one story that came in late in the trade session today was from South America as it relates to exports. Take a look at this map here. This pin shows the port of Rosario, and we got news that a ship carrying 45,000 tons of Paraguayan soybeans has run aground there. Expectations are for delays to be between 3 days and a week there. Rosario is kind of the critical export facility in Argentina. During the peak of harvest, they handle or unload roughly 15,000 trucks per day. So right now that is a concern on the export front, but this is the kind of story that could be putting a bid in this market for today, you know, maybe into tomorrow, but long term isn't going to have great bearing on the course of this bean market here.
You know, we did have some good fundamental news here today, but we also had some very solid technical indicators that were actually broken here today as well. If you take a look at the May soybean contract, we did have a gap formed yesterday after yesterday's trade. 1406 to 1412 was that gap area. Today we did go up and test that and actually fill that gap. Take a look at the hourly chart here for the May soybeans. You can see those last 3 bars, and that green bar in particular is where we actually went up and filled that gap around 1412. Shortly after that, we saw a major selling coming in the market. We ended the day well off the lows and below $14. So, you know, technical traders are going to look at this as, even though we ended up the day positive on the May contract, this is kind of a bearish signal in the longer-term trend that we could be poised to move a little bit lower on that May contract.
Yeah, you know, Brock, there's some indications that the new crop contract is starting to lose steam as well. Let's take a look at an hourly chart of the November contract as well. Each bar here is 1 hour worth of price action, and you can see here that this gray line is the trend line we've talked about quite a bit this week here on GrainTV. This is really the trend line that this soybean market, the November contract, has ridden higher since late January. And as you can see here, just in the last couple days, we've really tested this trend line. So from a technical aspect, technical traders are going to be looking at this as a sign of weakness. Additionally, you can see here that going back to about the 7th, this market is starting to make lower highs as we move through time. So that's another indication that this market may be losing a little bit of steam. And I continue to think that, you know, keep an eye on this trend line here as an indication for when this market may be ready to move lower. Kind of as you said, Brock, once again today we closed above the trend line, so technically that's a good sign, but as I said, we've tested it a number of times in the last couple of days. It seems like the conviction of the buyers is starting to wane a little bit here looking at new crop beans.
And something that seemed to be adding a little bit of pressure to the new crop contract was information from Allendale today. They released their survey of U.S. farmers, and what they found from that survey is that U.S. farmers are projected to plant about 83 million acres of soybeans this year, which will be a record. So that's something to keep in the back of our minds as we head towards that planning intentions report.
Yeah, you know, right now as we move toward that planning intentions report, keep in mind here at Grain Hedge we got a promotion going right now where you can get 5 free trades if you have an account open before then. So, you know, as we talk about here on the show, you can get live mobile quotes on your mobile phone or tablet. And like I said, right now we have a special going through March 31st, 5 free trades if you sign up. Give us a call for full details on that, 877-472-4607. That kind of wraps up the action, though, that we saw here on a very mixed trade on a Thursday in the grain market. We'll be back here tomorrow to break it down.